Good day everyone and welcome to Wednesday live trading session. Okay, so market is moving. Market is here. We could see some nice trades on our session recap, especially GBP dollar. That was trade of the week. And yesterday and even early today, 30 rejections from GBP dollar. So we could have made some nice pips trading solely GBP dollar. Now it's the time to see other markets, and of course today is a CAD rate decision, so it will be a little bit hard to trade the CAD pairs. I advise you to stay out of CAD, but still we have other pairs to trade. So guys, wish you a huge welcome on Wednesday live trading session, and let's see what we will have today. So patience is always the key to trading success, and always, guys, be patient. Don't jump in trades running for a freight train. Try to stay calm and relaxed during trading. Also, before we start, be aware of all risks associated with Forex market. So risk disclosure statement is stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And CFD and Forex trading are leveraged products and can result in losses that exceed your deposit, so they are not suitable for everyone. So this presentation is for informational and educational purposes only. Okay, so please have in mind that you should only trade if you accept the risk. And rules and setups. Okay, we use the POC zone, master candle, Volvay's price action, whatever we see fit. Everything you see here is my personal opinion and trade. We do market opening orders. We don't scalp here, okay, because scalping requires a lot of focus and attention, and it's not suitable for live trading. We do either positional or breakout trading. Okay, also, if we don't see a setup, well, simply, we don't trade, right? Once you're in a trade, you need to do your own trade and money management. Okay, so have in mind that once you are in a trade, please do whatever you see fit. How you will protect your trade, what you will do, it's up to you guys. The thing is, I teach you how to fish. Okay, I give you entries, stops, but trade management is up to you. Once you're in trade, okay, don't exceed, but before the trade, of course, don't exceed 0.5 to 1% per trade. I know it might sound like a low volume, but still is the risk. It is how you protect yourself from gambling. It is how you protect yourself from revenge trading, and also how you protect yourself from being an impatient trader. Don't exceed 2% per trade, and 5% is the maximum risk you want to take per day, but only if you're experienced. If you are a new trader, try to stick to 2% per day. I want you to have your account safe. You want to trade like professionals. Losing is part of the business. Keep your risk under control. Session recaps are from Monday and Wednesday to Wednesday. So these trades are valid from Wednesday till Friday, because this is live trading session. And have in mind that Friday is day to take profit, so you actually might secure your trades prior to Friday. Use profit stops, and of course, follow me on Tarantula FX. So yeah, so today I think market is a little bit ranging because of CAD rate decision. So we see a lot of pre-market movement, like euro dollar went up, pound dollar went up. It's not so relevant, but dollar CAD you will see, in pound yen also is going up. You know, it's like equities will react to CAD rate decisions, so every yen pair, guys, will react. You need to have in mind that yen pairs are the best risk gauge. The yen is actually the best risk currency, and when yen is going up, we usually have risk on sentiment. Okay, so That is very, very important for you to know. Okay, so this is the first setup. Oh, sorry, this is typo again. I will buy, of course, euro dollar. Just let me correct the slide. So I will buy the euro dollar if it drops, but still we need to see a little bit retracement. You might have traded euro dollar to the upside, okay, but still I think that for new trade we actually need to have it a little bit lower, okay. Okay, so this is the setup for euro dollar. If it drops towards 1900, I will make a trade. Let's see if it will happen during this live trading session. If it happens, I will make, of course, I will make as always live order as I always do on these webinars. So we want to see euro a little bit lower. I would personally like to see euro close to this daily L3 range. Now, guys, this line that you see here is actually master candle, okay? 1, 2, 3, 4 candles trapped within this high and low actually qualify this candle to be uh, the master candle. But the thing is, okay, we didn't see any breakout for the next 3 or 4 candles. We saw a breakout here, breakout made a double top, but still, guys, you can see here we have a steep trend line, okay, very steep trend line that is protecting this uptrend. But also you can see here if we put a trend line like this, okay, so this is rising wedge, this is actually bearish pattern. So, I would like first to see some sort of retracement before buying it. I cannot buy it now. Okay, I want to see a little bit lower. Ideally, the POC zone is here because this is the low of the master candle. This is daily L3. Okay, this is daily L3, and also we have a pivot point here. This yellow line, it's pivot point. Also, you see that last 3 days have been a bit bullish because this blue box is telling us that the day is bullish. So previous days were bullish and we are still in bullish trend, okay? But we of course want to buy a little bit lower. You can see the CCI. CCI is still up. So when we buy, we want to see the CCI actually goes in oversold territory, right? Because in uptrend, we want to buy when price is oversold. The first principle of buying, guys, you want to buy when price is low, right? Like everything in life, you want to buy when price gets lower, when price is discounted. It's the same here in markets, okay? So let's see. I will just I will show the label price here on this indicator. So here it is. So you see daily L3, it's at 1896, 621 fib from the bottom to the top of the last swing here is actually also within the zone. We also have, let's see, we also have a slightly higher. We have order blocks. So basically this is the zone, definitely here. Okay, here, this is the zone, and I will wait for the price. Okay, so let's see if I can chart this here. Okay, correlate. Okay. Yeah, I don't see the tool now. It seems that I haven't installed it here. Okay, so but definitely this is the zone here. Okay, so let's see if the price will drop. Let's answer some questions, guys, before I move to other pairs. Mihai and John are saying, great to see you back. Hope you had a great holiday. Thanks, John. Indeed, I had a great holiday, but batteries have been charged, and now definitely, yeah, I'm very, very ready for new market challenges and new trading season as always. Sundar is asking, can you take a look at dollar NOK? Yes, I will take a look. Elmo, do you calculate 1.5 to 1% as margin reserved for trade or in some other way? Well, it depends, of course. not just for margin, but it depends on your overall account. So let's say that for starters, you can do that easily because let's see if I have a script installed. Yeah, I don't have it installed here. But let's say that if your account is 10,000 euros and you want to, dollars, it doesn't matter, and you want to trade with 3% of risk, right? So your stop loss for the trade needs to have either 1% or 3% calculated into that risk. So if you make a trade of 0.30 lots with 30 pip of a stop, it means that if you lose your trade, okay, you will lose 0.9% of risk, roughly, right, on dollar account. So basically, you need to use the overall account balance for that to calculate. You can also use margin, of course, available margin. It's also perfectly fine. But when you are actually versed into risk management, you don't need any calculator. You can do it yourself. For example, if I trade on 50,000 euro or dollar, well, it's easier for me to say euro because I trade on euro. So I usually use, let's say, 1% to 2% of risk per trade, but I can allow 2% because I'm a professional trader. I don't have a problem with that. So let's say that if I have a stop loss of 50 pips, okay, so with a 50 pip stop, I don't want to lose more than 2% of my overall account. So if my account is, let's say, if I have some trades going on, then I need to use margin, of course, available margin. But regarding your question, it's usually the first trade that you make, so you need to have, then you have your free margin. But if you already are having some running trade, then you need to use definitely the margin that is left on your account. So I hope that you understand it now. So yes, of course, if you have already some trade running, then you need to use available margin, and you take 1.5 to 1% of trade from the available margin indeed. Do we have any setup? No, currently. Okay, no worries, Elmo. You're welcome. We are waiting for euro to retrace, but I will be scanning other pairs also. I don't have a dollar NOK. Let's see. I think I might open it here. Let's see. Dollar NOK. Yeah. Okay, I have it here now. It's Norwegian crown. So dollar, Norwegian crown. Yeah, it's trapped in the range from daily L3, daily H3. This is rectangle consolidation. So this is huge consolidation here. You have a big trend line here. You also have a trend line from this spot. So you have also a trend line here. So this is consolidation. Price should break out either way. I don't know what will happen because I don't particularly trade this pair. But judging from current price movement, this is range bound market. 32 pips, 62.5. Okay, so yeah, this is not big range on this pair. So I think the market can actually go both ways. GBP New Zealand on intra-week time frame. You are actually long on from 79.40. Intra-week time frame, you need to go to 4-hour time frame. Yeah, this is bearish bet here. Okay, so yeah, the target is here, 81.69. This is your target for intra-week trade. It's monthly H3 level on Camarilla. Okay. So this is on Camarilla. This is, I'm not sure that you have Camarilla, but just mark it down on your chart. 81.70 monthly H3 level. That is the final target. But have in mind that you should protect your profits now because the price already rejected from this bad pattern here, you see? So it could go down a little bit because there are sellers now. You don't see the picture. Okay, now you should see the screen. So you see, for all of you who are trading the GBP New Zealand, okay, this is the bat, okay, the bat pattern here, and you see there was a lot of sellers here. There were a lot of sellers. They rejected the price for 200 pips. So the price is very close to this resistance. So your first intra-week target, Marco, is here. If you decide to protect your trade, you can scale out, and this is your final target in between monthly H3 and weekly H3 from 1.8970 to 1.8998. So here is your final intra-week target. Mark it down, okay? Dollar yen analysis, okay, let's see dollar yen. Dollar yen currently I think this is also range, but I have something that I don't like to see. And you know, guys, what I don't like to see, because some of you have been long time traders here with me. I don't like to see this. Okay? This is what I don't like to see. This is megaphone, or so-called broadening top. Actually, this is broadening bottom because the price is dropping, and at support it formed a broadening bottom here. So this is, simply said, this is megaphone, and the price makes big range up, down, up, down. This is not bullish, neither it's bearish. So I wouldn't trade this personally, really. I wouldn't trade this personally. Roberto is asking, can I say something about scale in and scale out? Yes, I just need to finish with showing possible trade setups. Jack is asking for GBP dollar. Well, if you followed me on Twitter, there were some traders who told me that they made some nice profits from my 30-30 sell. Actually, starting from yesterday here, we saw a lot of selling from 30-30. 1, 2, 3, 4, 5, 6, 7, 8 times 30-30 provided nice selling spots. And if you followed me on Twitter, I said it cannot hold forever, because this was the first rejection here, and the first rejection was good for 30 pips. But you see this candle here. This candle actually told me that probably in the morning we will have a change of trend. And actually that happened with GBP crosses, GBP dollar and GBP yen particularly. So you still had the chance to scalp 30-30 rejections. And I said it cannot last forever. It will probably be broken, and usually it happens when we see a 3 or 4 time retest. Usually the price breaks, and it happened. Similarly with GBP Yen, we had, oh, this is also butterfly. So we still have a retail gap here. So as I said today in my analysis, we could see a nice spike in GBP Yen if you read my analysis on Forex Street and on Other Markets Facebook. And on my Facebook, yeah, I published it. So here, I think we could buy this because this was downtrend starting from, we don't need this one now, really, because I will not trade this patterns now. I will stick simply to, okay, to price action. So here, this was downtrend basically when price made this retail gap. See? So the trend line has been broken, and also this wedge broken to the downside. But actually this was uptrend, okay? So it was just a matter of time when the price will start retracing. And it started to retrace after this inverted head and shoulders. So this was the start of uptrend. I will buy pound yen here again. And I will make a pending order now. Okay. I will make a pending order now. Okay, so just give me a few seconds, guys, and I will show you 141.75. This is the zone, and it's actually very close to this pivot. So definitely pending order, 41.75, but I will be very careful after the CAD news. I want to see this hit, and once I'm in profit, I will protect it. So you see, buy limit order here, 141.75. This is the zone. But the only thing is, I would like to see this happening maybe after the CAD announcement, because I think that CAD announcement will also move pound yen. By that time, we can also take a look at M30, guys, because M30 is also good to trade. M30 and 1 hour are best for intraday. Sometimes if I miss 1 hour setup, I switch to M30. But basically, it's the zone what matters. So the only thing is CCI will probably drop to oversold on M30 before actually H1. That is why I watch M30 and H1. So I want the price to be in oversold territory, either on M30 or H1. I think on the zone is clear here on H1, and if we switch to M30, I think that the price will show oversold here, exactly at this spot. So let's see what will happen. We have inverted head and shoulders. This is left shoulder, this is head, this is right shoulder. This is the zone. This is master candle here, 1, 2, 3, 4. 1, 2, 3, 4, you see, breakout to the upside after some whipsaw. And I think we could probably buy it here. And yeah, stops should be placed. It's like 35 pip stop below this, 141.35. So it's 141.30. Because if this breaks, we will go down. And even then, we might see a big stop grabber here. So maybe we can, if we lose this trade, we can make a trigger happy trade here. But I don't think this is probably an uptrend. Maybe pound yen will try to close this retail gap here. You see, from daily H5 ATR here, this is the gap, retail gap. So we have now two possible trades, euro dollar 19.00 and pound yen 141.75 here. Let's see what will happen, because we also have a trend line here that corresponds to this zone. Let's see. Next question is, yeah, I need to answer a question about scaling in. So this is how I do it. Let's say that my overall risk for this trade can be 0.40 lots, according to stop loss that should be placed here. I opened one order with 0.15. Price got into the zone deeper. I will add 0.25, right? And I will not move my stop loss. That is called scaling in. So when you scale out, you close one of your trades and then you leave the rest running. That means securing your profits. So let's say that I have two orders. This is one order, and next order, let's say, has been initiated here. So what would I do? If the price gets upside, to the upside, I will move my stop loss for, let's say, one of these trades. Stop loss is always the same. I will move my stop loss in profit. So that way I will secure profits. So that means that I will be making so-called profit stop. Remember this, using profit stop is very important, because when you use profit stop, you're actually securing yourself from big intraday spikes. The big problem with traders who trade on intraday basis, they don't use profit stops. And guys, it's not the same as it was 5 years ago. Trading is much different. Today you have very unstable political situation in the world, and a lot of intraday news can move the price in a second. So basically, when you trade intraday, you need to use profit stops. So what would I do? Let's say that my buy limit order has been hit and the price goes up. I will move my stop loss in profit. If it breaks daily H3 again, I will move my stop loss couple of pips below daily H3. If it moves above daily H4, I will move my stop loss here. If it breaks this level eventually, I don't know if it will break it, but I know what I will do. I will again move my stop loss here. That is how you secure the price. That is how you ride momentum. And momentum for intraday trading is everything, guys. Because you want to buy when price is retracing. That means reverse momentum, right? If the price is in uptrend. If the price is in downtrend, then you need to actually wait for a rally, then sell it. Josip is asking me, why move stop loss? Isn't it better trailing stop? Josip, for me, it's not. Because I'm Camarilla trader. And, you know, let's say that I will try to repeat this again because I'm not sure that you're following me. So this is my limit order, initial. This is my stop loss. So the price gets here and it breaks daily H4, okay? It's easy. I will just move my stop loss here because I know that this is strong level and it's 142.16. I will move my stop loss to 142.13, let's say, or 12, okay? Because this is the level. Trailing stop does not use levels. Trailing stop is purely trailing stop. It doesn't take Camarilla into account. When I trade, I take my Camarilla. So if it breaks this level, of course I will move my stop loss here. Because this will become support. Now it's resistance. But when it's broken, it usually, and retested, it becomes support. And I want to place profit stop below support. If there is big momentum to the upside, then this pair will break daily H5 and possibly go towards the gap close. What I will do then is just move my stop loss here. Because I know that this level is, again, it will become support. Now that is the answer why I don't use trailing stop. I use profit stops. And one more thing, profit stops also use big banks. I know that from the first hand because I have a few friends, good friends, that actually also work with big banks, and they know how their traders do, and bank traders, institutional traders also use profit stops. So I want to follow always what banks do, right? And I prefer Camarilla. Some people might prefer other indicators. My favorite is Camarilla. You know that already, so it's okay. So 1 hour time frame and M30, in my opinion, for Camarillas are best for intraday trading. So that is why we stick to 1 hour, and we might zoom in just to see if this CCI will drop to oversold for actually buying it within the zone. Samir is asking, I am new, great explanation so far. Maybe a bit out of topic, but when talking about Camarilla, how to get a better feeling when the price will reverse? When the price will reverse. Good question. What I do then, for example, when I want to see reversal, this is a good maybe advice to all of you who are following price reversals. It's actually counter trend. For example, guys, this is the best what I can do, and this is very simple. ATR indicator tells me that the ATR for the last 14 days is 111 pips, right? Here. So what does it mean? This is the top of ATR projection. This is daily H5. So if the price breaks heavily here and it makes CCI divergence or MACD, whatever you prefer, then it just needs to make bearish candle, reversal candle. So it needs to get to the top of the ATR, to the top of Camarilla, and even better if it overshots it. And then what you do is actually wait for a reversal candle, and you can trade that retracement. I mean, pound dollar effectively changed the trend. But guys, yesterday we had a nice rejection from 30.30, right? Because the price overshot. The ATR yesterday was overshot, and this is dark cloud cover, guys. Watch this. This is dark cloud cover. And we had some nice reversals. Do you see that? I mean, it's very, very interesting. And this was that, right? Dark cloud cover. So just try to do that. I mean, trading is not hard. I think that trading is actually very fun and very relaxing. You just need to pay attention to your risk. Because when you're trading with big risk, well, then trading might become hectic and dangerous, and you don't want to do that. Okay. Now the question, Australian dollar here, a big drop in Australian dollar. So basically this tells me bearish day. You see the color. Now the price is in downtrend. The price is bearish. Okay, so what should we do then? I would actually sell Australian dollar, but not now. You see, CCI is oversold. So I will wait for the price to get into overbought territory and try to sell it. Tibor is asking, I thought that TP is the same like weekly recap. Tibor, weekly recap is Monday till Wednesday, and if you traded pound dollar, you could have made 100 pips, because on session recap we had a buy position on GBP dollar. If you remember, we bought GBP dollar from this spot, so you could actually you could have made nice pips buying it from this spot here. But now, obviously, yesterday I gave you a sell trade, and well, you could have made 20-30 pips from a sell. Okay. So yeah. Okay. So live trading session is Wednesday, and these setups are valid today, tomorrow, and early Friday. Monday is valid. Monday session recap is valid for Monday, Tuesday, early Wednesday. This is intraday trading, guys. We are not making position and then wait 5 weeks to develop. We are making trades each day. Okay, I'm an active trader. I like to go with momentum. One day we can go long, next day we can go short. Whatever market throws at us, we should be able to trade, right? So Australian dollar here is actually a sell, a probable sell. I think the price will probably go to this spot here, close to weekly H3, okay, and then probably here within the zone, either M30 or 1 hour should give me CCI overbought, and then bang, we go for a sell. Sundar is asking, is ATR 14 ideal? I have ATR 5. I prefer ATR 14. Last 14 days. That is what I prefer. I mean, guys, some people will say, right, we can make money with trading other systems. I know there are a lot of different ways to make money in markets. So some people maybe use other ATR. I prefer 14 ATR. For me, that's the best. I don't like to have it stretched just to 5 previous days. For me, 14 is the best. Okay. Adam is asking, what do you think? Do you use Camarillo on daily and weekly? I don't trade daily time frames. You see, because daily time frames will take a lot of time to develop. But actually, it could be good for daily traders. I will be honest with you guys. I don't have patience to wait for my trade to have 100 pips, I don't know, for if I wait for 3 or 4 days. Because very often from intraday trading, it takes me only 2 days to make 100 pips. Right? Because I like to be active. I'm patient when it comes to entries, but I'm impatient when it comes to waiting for my entries to have like 100 or 200 pips. That is why I don't trade daily time frame. I simply don't enjoy that. But yes, I think if you just follow these levels, you can make something out of it. I prefer 1 hour, and I use Confluence for entries. The question is, Euro New Zealand good for sell? Well, it could be. This is retracement here because 3 previous days were definitely bearish. And you see this is bearish. High, low, high, low, lower high, lower low, lower high, lower low. So this is compared to this trend line, we have lower highs. So yeah, it could be good maybe for, yeah, this looks like it could reject. But Euro New Zealand is nasty pair indeed. Let's see. I think this is Fibonacci. We might have, I don't know, maybe I will trade this one. Yeah, it looks like it could reject, but I would rather wait for this hourly close. If I see bearish reversal pattern for this hourly close, then I might make a sell trade. But I want to see if this will not be a hammer. Because if it shows me a pin bar or inverted hanging man, then, you know, it could be bullish. I want to see bearish candle, preferably close with a close for a dark cloud cover. So yes, I would wait for 1 hour close to see how it will close. If it makes a dark cloud cover, I think I will sell this Euro New Zealand. So I'm paying attention to that, indeed. Okay, so that's it. Let's see what, yeah, pound yen, you see it's going up. I told you today this is, it looks like uptrend switch. So we might really see Maybe after CAD news, we will see some drop. So if the price drops, I think I will buy this. And I will keep my stop loss below 141.35. Okay? Let's say 141.30 will be stop. Because if the price breaks this this level, it could be a stop grab lower. Question about Australian dollar CAD short. Okay, short on Australian dollar CAD. Let's see. Not now. You need to wait for you're short from 98.96. You see, this is now, this is it. This is support, and there is a lot of buying here. So I would protect my profits if I were you, because this is, you see, 1, 2, 3, 4, 5, 6 candles with big buyers, and every single candle had a close above daily L3. This could go up. I would protect my profits definitely. Yes, I know Euro New Zealand, but the thing is here, if it makes dark cloud cover, I think it will go down, because you see there was a big spike from 61.10 to 65.50, 150 pip spike, and watch the ATR. The ATR has already been overshot. So this is uptrend, but this would be a counter trend trade general with these last 3 bearish days. So I will be selling that, but I want to see only a close of the candle around 65.35, close or below, because that will be dark cloud cover then. Even lower, I think this could be a sign for a reversal. What do you think about New Zealand dollar? Okay, let's see New Zealand dollar. New Zealand dollar. Yeah, this looks, it was selling from M. So this is M pattern here. Bearish pattern, you could have traded this. This was a break of M. See? So this could spike from this spot here. I think that this could spike again to the upside. This looks like a breakout, but the price is very close to the ATR bottom, so this could spike up. Adam, I don't have DEX here. You see, it's only currencies, only Forex here. And GBP Australian dollar. Then we will make quick resume, and I think that is enough for today. We have 2 possible trades. I already made a pending on pound yen. Euro dollar also, I will make a pending. Okay. So I will make a buy trade pending at 1.1902. 1.1902 buy limit order. Okay, so these are 2 possible trades. Okay, guys. And GBP dollar, no, GBP Australian dollar. It was a question about GBP Australian dollar. I need to put it here. I don't particularly trade this GBP Australian dollar a lot, but let's see, it should be here on the screen. I prefer GBP Yen, honestly. Yeah, this is big uptrend, so this is buy on dips. You need to see when the price will start to retrace and find the zone and trade it. So this is uptrend. Yes, it's negative correlation with Australian dollar, indeed, Gulad. Also, guys, the last question is, I mean, Ilya is asking dollar CAD. No, I won't be doing any dollar CAD trades simply because we will have a CAD rate decision today. And CAD will be very volatile. I don't know what will happen with CAD because that is strictly fundamental trading. And I don't want to mess with dollar CAD on rate decision day. So everything can happen, guys. Everything can happen. I will not be touching dollar CAD. And as I'm saying, thanks for explanation over Euro New Zealand. Okay, guys, so this is it. If this candle closes showing a dark cloud cover here, I will sell Euro New Zealand and my stop will be above this high, 5 to 10 pips. The overall risk for a trade will be 1%. Euro dollar is also, it's even lower risk, and this is the zone. 1.19002 is my pending order, and GBP Yen 142.75, although it could maybe drop a little bit lower, but this will be my buy limit order. So pay attention to that. Stop loss for Euro dollar is 1.1870. Final target 1989. But still, as I say, protect your profits. So that was it for today. I hope that we will also make money as we did with session recap and GBP dollars. So let's see what market will give us. So 3 possible trades: Euro dollar, okay, Euro dollar pending order long, pound yen pending order long. Trades should be valid until later. I just will be very careful after after CAD rate decision, but it will have bigger impact on GBP yen than on Euro dollars. But I will be paying attention to that. And Euro New Zealand should be not affected that much, but there will be volatility. So please protect your profits once you are in profit. Thank you for listening, guys. I will be here with you very soon. Let's see what market will give us. I wish you a trade safe and cheers, everyone. Talk to you soon.